If he think from the day one, I want to secure 90%, 90%, 9%, and not focus on the upward side. He will not get 90% from that. But now he has decided that from the first month, there are 12 chapters. The first month, I'll study 3 chapters. The second month, next three. 4 month, I'll complete the whole syllabus. Next 4 month, I'll just keep repeating. In the last month, I'll solve 10-year question paper. That's a proper plan. So now he will definitely get 90%. So that's the difference between a goal and a dream. Now, next slide, please. So most of us thinks that we don't need a financial planning, and you can read out the screen. There's a basic reasons that somebody think that I don't need a financial plan. Like I have a good study. I have a good and steady job. I don't worry about financial planning. I have a lot of money. My kids will take care of me. I can rely on my savings. I don't need estate planning because it is for richer people or wealthy people. I don't worry about healthcare loss as I have a government job. My government will take care of it. So these are the basically 5-10 reasons we think that we don't need a financial planning. On the next slide, please. But before thinking of all those points, we have to ask ourselves the questions. The first question is, where do I want to go? The second question is, by when should I reach? And the third question is, how do I get there? So basically, if like I want to travel to Delhi from Dehradun, so there's a multiple ways. I can travel by road, I can travel by plane, I can travel by basically bicycle, I can go by road. I just add here, I travel to Delhi on road from Dehradun in 3 days and 4 hours, 250 kilometers. That I've already did. So, but the thing is, how fast I go. When I added a question, how fast I want to go. So if there is an emergency, you will choose a aeroplane. If there is no emergency, you will choose a train or a road transport. So whatever you want to, the financial goal, you have to attach a timeline to it. And as per the timeline, basically you want to buy a car in 1 or 2 years, you want to have a destination. And as per the timeline, you have to manage your financial that goal. Now the next slide, please. So if we don't have the answers, exact answers, that how we will reach. If we have the exact answers, you are already perfect, basically, and you don't need a financial plan. But if you don't know the answers, like questions like I will have the roadmap to create my retirement planning? Do I have the roadmap to have enough money, the house I want to buy? Do I have the enough money for my kids' education? Do I have the money for my kids? If the answers, you already have the answer, you already have the roadmap, you are already on a good financial plan, basically. That's a refresher for you, nothing new in it. But if you don't have answers or answers are elusive, then basically you definitely have to start your financial planning from today onwards. Next slide, please. So there's the journey. Journey is first getting started, then moving up, then preparing for it, and then leaving a legacy for your generations. Next slide, please. So basically, now in further slides, whatever is there in this slide, I'll discuss it further. The key focus area of financial planning. First is debt management. Second is investment planning. Third is retirement planning. Then our cash flow management. Then our insurance planning. That is tax planning. Basically, debt management means basically if like I have a multiple loans like car loan, home loan, or a personal loan, then I have to repay my personal loan first because I am paying the highest interest on it. Or if I have a credit card loan, that's basically I've taken loan on credit card, or I've swiped the credit card and the date is there. So credit card companies charge 36% per annum. Anyhow, I have to pay that loan. Even if I have to top up my home loan, then also it's a good idea. Top up your home loan and pay your credit card. Don't pay that kind of interest. Otherwise, it will have a negative compounding and you will not able to accumulate the funds and you will always be remain in debt. That is a trap basically. Once you keep getting a loan, you always get a phone only when you have a number of loans, because the companies, that banks, companies, NBFC, they also know the person has a good track record and he has a habit of taking loan. Whenever we will give them a call, he will definitely take the loan. Second is investment planning. For example, basically, I'll just give an example. If I bought a car last year, so the EMI is 20,000. I have done a SIP of 20,000. So after 5 years, whatever the interest I'm paying and the interest I'm getting, the capital gain I'm getting from SIPs, that will be 3 times. And what I did in the past also, when I bought my first car, I did the EMI at that time was 8,000 rupees. I have done a SIP of 8,000 and I paid approx 2 lakh rupees as an interest to the company, and I earned 6 lakh as a capital gain from the SIP. So the idea is to, whenever we are having an MI, try to have an equal amount of SIP. So you will not, there's no need to take the loan again, probably. You will have the enough corpus from that savings also. And also you have a confidence that there's a money lying in my bank account or my mutual fund or in my fixed deposit or in my PPF account, that I can pay that debt always. That trap people, only those people get trapped from a debt or a credit card who are not having that equal amount in different asset class. If you are having an equal amount in different asset class, then you will not be, there's no harm in taking loan, but the problem is to get into trap. You can avoid the trap by building a corpus side by side. Second is investment planning. Investment planning is basically choosing the asset class. It's like we can do investment in equity, debt, gold. There are different, 3, 4 different asset class, real estate. So we have to choose wisely where to block our money. If like we are buying a real estate, we can't buy a real estate like 5,000 a month or 10,000 a month. We have to have a bulk amount and we have to take a loan. So is the right age to take a loan or not? Or is it the right investment? Because if one real estate investment goes wrong, there's no way back that you can again create your finances. If one SIP go wrong, when shares you bought that go wrong, because you are investing 10,000 that share or 5,000 that crypto or 5,000 rupees in that SIP. If that decision goes wrong, there's a chance you can correct that decision. But if you bought a property crore rupees, you have done you have done spending your savings 20 lakhs, you have it home loan 80 lakh, and that property will not work. Or property like in Noida, that happens basically, that builder has not returned the money or builder has not given the position. If that decision goes wrong, there's no way back. You can't basically get again track on your financial planning. So we have to choose the real estate wisely. So I just my suggestion is basically, if in your 20s, 25, 30s, there's no hurry of buying a property. You can buy anytime. Delay that decision by 35, 40. Have some corpus, buy SIP, mutual fund shares, 30, 40, 50 lakhs, 1 crore, whatever your salary, that's it. And the minimum that anybody has to save from salary, it's minimum 10%. Third is retirement planning. Basically, retirement planning is that current inflation is 6%. So we have to have whatever the expenses, we have to calculate whatever the expenses right now or whatever the expenses will be after 20 years. So after calculating the expenses after 20 years, we have to calculate that do we have the enough corpus? Do we will have the enough corpus that have the interest income of that equivalent to debt expenses? That is called retirement planning. The next is budgeting and cash flow, that I'll discuss later in the next slide. Insurance planning also discuss in the slide. Tax planning, we can go to the next slide. I'll discuss in the detailed slides for them. Now the first step is define your goals. How to define the goal? I already told, we have to give a date to the goal, and that has to be materialistic and have a monetary value achieved. You should have a target period, and goal should be realistic. The goal can't be like that. I want to beat a money in next 5 years. I want to basically buy a chart in next 1 year. And you are earning a lakh rupee, that can be basically and I am buying 2 lottery tickets daily. One day I will win the lottery and I'll achieve my goals. That is not a realistic goal. Realistic goal, like I am earning a lakh rupees and I'm saving 10,000. By saving 10,000, it's I'm saving 1.2 lakh. SIP is growing by 12%. So after 5 years, I have like 8 lakh rupees and I'll buy a car, 6 lakh rupees, 2 lakh rupees I'll save as an emergency corpus to pay the EMI in case I have job loss. That is the realistic planning. Second is take stock of your finances. Basically, uh, we will have a question answers, then I'll discuss your questions in that. Let me complete first. That second is take stock of your finances. Check the following to get a clear picture. Basically, check your net worth. What is net worth? Basically, net worth is assets minus liability. Like for I have a car is a asset, although it's a depreciating asset, but it's an asset. I have a real estate, it's an asset. I have a basically fixed deposits, that's real estate, that's an asset. PPF is an asset. I have a home loan, it's a liability. I have a personal loan, it's a liability. I have a credit card loan, it's a liability. So I have every month on last day of every month, I have to calculate my net worth. So it's a simple Excel sheet you can do. You just write that these item I have to plus my property value, my mutual fund value, my bank deposit, my PPF, my PF. Even you can add your provident fund, NPS fund. Everything you have to add and minus basically the outstanding of your home loan, the outstanding of your credit card, the outstanding of your personal loan that you have to minus, and then you have to see your net worth is plus or minus. If it is not plus as of now, so you have to increase your investments in such a way that it has to be in plus. The second is basically you have to understand the inflation. We say inflation is 6%, but I'll say if I'm residing in Dehradun, my inflation is 6% or 7%. But if you're residing in Bombay, your inflation is 10%. If somebody is residing in Bangalore, his inflation is 15% because the expenses differs, the lifestyle differs. So, for example, the inflation of a person basically who's a farmer going to farms, coming to home. No, he's not seeing any movie in a month. He's not going to any club in a month. He is only expenses is on food, basically 5-10,000. So his inflation is way less than that 6%. But if I'm a kind of person who has a hobby to go to clubs, who want to watch movie every weekend, then my inflation will be different from other inflation because my expenses are different from the other person. So basically, what is the inflation? The total expenses I am doing and the adding the cost, increasing cost of those expenses. Like uh, 5 years back, when I want to watch a movie, I have to pay with 300 for a ticket. Now I have to pay 500 for ticket. So that's basically my expenses has been doubled in last 5 years. So it's like I'm going club, it's cost me 1,000 rupees. Now it's costing me 2,000. So my expenses are double. In some case, my expenses are triple also. If a person who's not clubbing, who's not, so his inflation is his requirements, needs, and wants are less. So basically, his inflation are probably 7%, 8%, 9%, and my inflation will be 10, 12, 13%. We have to calculate our own inflation according to our expenses, and then we have to plan our investment in such a way. Now, after taking the reality check, we have to execute, we have to implement. In case you are not very savvy which investment to do, which mutual fund scheme to choose, which share to buy, NPS is good or not, or basically PPF is good or not. Do I have to put in a liquid fund or an arbitrage fund, or basically is fixed deposit good or me? Then you have to hire a financial advisor or you have to seek the professional advice. There is no harm in getting professional advice. Uh, First 2 years, I was working on my fitness and I don't have any coach. So I'm not getting the desired result. But once I hired a coach and I'm working under his guidance, the results are different. So basically, professionals are, if I try to, if I have some, uh, किसी से झगड़ा हो जाए, then I want to hire a lawyer. So if the lawyer is, and I try to fight the case myself, I can't win. So I have to hire a professional. So, again is monitoring and strategizing. When basically we have planned, we have implement, then we have to strategize also. We have to have the progress of the portfolio after 3 months, after 4 months. Is it aligned to my goals? whatever I have decided is going out according to law or not. So that's monitoring is also important. So likewise, I just relate the example of fitness. I am doing everything. I'm on a strict diet. I'm running 10 kilometers daily. But after 3 months, if I'm not getting the result later, I have to monitor it. Then I have to check thoroughly that what went wrong. If I found that these are the 4 days I not followed the plan. So next time I'll follow the plan in these 4 days also. Then the result will be different. Next slide, please. That's we have already discussed. Where do I want to go? By previous slide, basically. Previous slide, Rohit. Uh, yeah, that's this slide, basically. So we have already discussed is where do I want to go? By then should I reach? How do I get there? Now we will discuss in detail. Next slide. So this is the slide basically budgeting and cash flow management. We have to set clear financial goal. Then we have to track income and cash expenses. Where we lack, we will not monitor from where our money is coming, where money is going. Basically, I'll tell you, last month I just sit and check my credit card statement. From last 4 months, I was paying 200 rupees on Netflix. All the very small thing, but I just I not watch a single series on that web series. I immediately cancel that. Why I'm paying? If I'm utilizing something, paying it's okay. But if I'm not utilizing it, why to pay it for? There are a lot of subscriptions that we do once a time when we need it. But we have not utilizing. So there's no need to pay. Like a gym fees. We always we go to gym. I want to start. That he said, so 300 for a month, but 500 for a month. But if you take the membership for the year, I'll pay. You have to pay only 8,000 or 10,000 or something basically. So that like by monthly it coming 36,000. He will give you an offer of 20,000 or 24,000, and we immediately think it's like cheap. Let's buy it, and we go to gym for 1 month, 2 months, 10 days, 15 days. Then our motivation, our discipline basically went away, and we have stopped. He has earned good amount of money and we have lost. Instead of that, we have paid a monthly fees of 2,000 rupees or 3,000 rupees and continue for 3 months or 4 months. So what happened basically, now we are paying, we are utilizing, we are paying, we are utilizing. Next example is like a car. I always say to my client, it's
मशीन चल रही है ना.
am I audible?
Yes, you are audible.
Yes, yes.
So next example is car. I always say to my clients, my car is there in showroom. What's the need to bring it to your home if you are not driving it? 3,000 kilometer in a year, 4,000 kilometer a year. You can hire a car. You can hire a driver also. You don't have to drive. It's, it's beautiful there in showroom. Why you're like occupied a space? You can do gardening in that space. The car is the parking there. So these are very, very small things basically. So if we work on it, like what we have to difference between need and want, and then basically if we are utilizing that thing in our business, in our daily routine, there's no harm in paying. But we have to rethink, are we utilizing or not? That is the first basic principle. Then you will have a lot of expenses and you have to do this is in Excel basically. The first step in anything that we want to improve in life, whether is our health, whether is our wealth, first step is just to know, are we going the right direction? Like your body basically. I'll just ask anybody, there are 20, 30 people there, how's your health? You say good. I'll say just let's do a blood report. We need a blood report and there are 5 parameters that are. Now, if somebody asks you a question, how's your health? B12 is negative, although this is negative, this is negative. Now you have the answers. Now you know basically what is there to improve. So same thing is with your wealth and finance. When you know basically from what you are earning, where the money is going, can I redirect it basically somewhere else? It's going to fixed deposit only at 6%. Can I do SIP at 12%? Or can I invest in gold basically instead of fixed deposit? The last 10 years fixed deposit has only doubled and gold has given 4 times kind of return and the same safety of fixed deposit. Can I redirect? So you will have the answers only when next question answer only when you do the first step. First step is to aware about your money, because money is like a kid. If we will not give the direction, right direction, can go anywhere. Now, this create a monthly budget. Allocate a portion of your income to different categories, such as basically saving, essential and discretionary spending, and then monitor basically the budget is over budget this month or is under budget this month. If it is under budget, you can allocate that fund to investments. If over budget, you can take it from your emergency expenses. That is, what is emergency fund? I've in last 15-20 minutes I've used 3-4 times. Emergency fund is like I'm earning 1 lakh rupees. 6 lakh has to be liquid amount any point of time. 6 times of your monthly income. If you are a professional, you are earning from a business, you just take out the average. If you are a freelancer or a businessman, if you are salaried, that you know that fixed amount is coming. But in case you are a freelancer or a business person, you just take out the monthly average, like in last take out or last ITR, last financial year, whatever the money has created in your bank account, take the average of monthly average of that. For example, like 3 lakh is the monthly average. 18 lakh has to be there in your bank account or a liquid fund always. When any emergency happen that is not planned expense, hospital expenses or some marriage function come, you have to gift something. This kind of expenses are not a part of monthly budget. They can come anytime. So we have to have an emergency fund to fund those expenses. Now we have to review basically. We have to review periodically every month. There are 2 things you have to do. First, you have to have an expense tracker. You can download your bank statement. You can download your credit card statement, because now 90-95% we are doing spending digitally only. Only 4-5% we are doing in cash. So 95% of expenses, you just download all the statement. It will take only 45 to 1 hour, and you put everything in Excel. Basically, there is no need to do manually. There is an AI tool, ChatGPT and all. You can just, if you want to disclose your personal information to ChatGPT, then you can download and do it. If you don't want to do it, you can do it manually also. Just by basically typing in Excel expenses, income, and whatever the income minus expenses. This thing you can do each and every month. Then you have to understand your cash flow basically. Inflows and outflows I've already mentioned. Then I have spoken about is high interest debt and a low interest debt. It's the credit card. If you are paying an EMI of 2,000 and interest is 200, very high interest. First, you have to clear that EMIs from your savings or from, if you don't have saving in your bank account, then you can take a top up of your home loan, or you can take a loan at a lower interest and repay that higher interest. There is no harm in paying the higher debt with increasing the lower debt. Optimizing payment schedules. Like I'll tell you one hack how to reduce your home loan EMIs if anybody have. The home loan EMIs reducing is basically you have to top up your EMIs. Like if you get some 10,000, 5,000 there, you just pay in that your loan. And every year, like as your salary increase, some part of portion you increase your SIP, some part of increase you increase EMI. If you are paying EMI of 20,000, start paying 25,000. So basically, it will definitely reduce your tenure or EMI, and you can pay your loan fast. Focus, control variable expenses. Basically, this is you have to identify and you have to prevent basically that is impulse buying. So if like I have to buy something, I can delay it. Whenever we delay, we give a pause of 5 minutes, 10 minutes. buying scrolling on Amazon, or if we give a pause of 15 minutes, if we are into shopping mall, will definitely basically can reduce a lot of expenses. Next slide, please. The main is managing debt. It's very, very crucial for any financial planning, because debt is something that has a negative compounding. Like I'm doing SIP, that giving me a positive compounding. For example, I am doing SIP for 5 years. I'm paying for SIP, for example, 5 lakh. After 10 years, I'm getting 12 lakh, 7 lakh rupees as a capital gain interest. Or am I doing a fixed deposit? After 8 years, I'm getting double my money. Same with that. You are taking 10 lakh, but you are not repaying 10 lakh. You are repaying 20 lakh. Or in home loan, you are repaying 30 lakh. So that hard-earned money, your 10 lakhs of your hard-earned money to going some company, they are earning from you, or going to the bank. So that you have to understand, whatever the debt you have, basically, you are having a negative compounding. And if you have a lot of negative compounding, your net worth will always be negative. You are not able to, will not able to come out from the debt. You have to reduce basically your debt. And there are two methods of doing that. One is snowball method. Second is avalanche method, basically. Uh, the first method is focus on small debt first, focus on high debt first. List debt smallest to largest, list debts highest to lowest. The important is basically, normally what we do, we try to pay the smallest first. But my point here is pay the debt that has the highest interest. Strategy is pay minimum on all, extra to smallest debt, pay minimum extra to highest interest. Basically, it will, whenever we start paying the loans, we have the high moral. We feel motivated. We feel that basically now I paid the debt, and you have that feeling. Basically, if in your lifetime you have taken a loan from a friend or basically someone, and when you repay it, you always feel good that now I'm like clear of the debt. You will speak a lot of time. I have paid, I have paid, I have paid. And that feeling is very, very comfortable. So whenever I pay my EMI, whenever I clear off any debt, I have a very, very happy feeling. So we have to track our loans every month. So what we can do, basically, we can download, it will take only 10-15 minutes. We can download all our loan statements, that a home loan statement, that a credit card loan statement, or a personal loan statement. And then we have to check the outstanding amount, that as of now, basically, uh, how much outstanding is it, like home loan 30 lakhs, personal loan 10 lakhs, or a credit card is 5 lakhs. So uh, when we have in front of us, na, then we realize that we have to pay. Sometimes basically we are not knowing. I met a lot of clients, when I ask what's your home loan outstanding today, they're not able to answer. What's your personal loan outstanding today? We have to know each and every day how much I have to pay. I have to be aware about my debts. I have to pay in time. So basically, when I'm aware, I have to pay 80 lakhs as a debts. Whatever the money I got from any source, I'll not expend on in anything. I'll not buy a new phone. I will not buy a new car, because the back of mind is running that I have to pay. I'll immediately pay, and that's how what happened. It's not like that we are not earning. We are earning a good amount of money. The money is flowing to us, but we are not redirecting in a right direction. So what happened, basically, when we are not aware about that, we have money in the bank account, we have the money there with us, but we are not paying into our debts. That's very, very important. This is how we can manage that. Now I add one more thing, basically. There's something called RBI repo rate. So whenever the RBI decrease their repo rate, we have the lower home loan interest. Like in last 1 month, 2 months, RBI is reduced 50 basis point. So now it's your home loan has to be as in a range of 7.9 to 8.1. So you all just revisit whosoever has a home loan, that what's the interest rate of my home loan. So when you are aware, when you have checked the monthly debt, then you know what that interest rate. I know the person, they are paying 9% as home loan interest, 9.2. Even when the car loan is at 8.3%, how can your home loan is at 8.99? You have to ask your banker. If your banker is not reducing it, or your NBFC company is not reducing, you change the company. You can like transfer your debt to someone else. That you will do only when you check your statement every month. That I have an outstanding of 52 lakhs 57,000 and the rate of interest is 8.7. Then you will call your bank that my friend similar profile having a rate of interest of 7.95, same salary, everything is same, why I'm paying 8.7? Then say, oh sir, we forget, we have to check. Then they reduce, they pay some amount to 3,000, they will reduce you. So if you are not asked that question, they will not reduce, they will earning. Why they will ask? While they will reduce, they are earning a good amount. Banks are basically is the most profitable business. They are getting money at 2.5 to 4% and they're lending it 8 to 12%. There's a 8% of margin, is a huge margin. Next slide, please. Now, insurance. I say basically you have created wealth, but you have built a house or anything basically. But how to have prevent the leakage? So insurance there to prevent a leakage. Like in COVID, we have seen basically expenses like max hospitals charging 45 lakh, 50 lakh. So if you have accumulated 1 crore over a period of 20 years, in 4 days, you have spent 50% of them. Health insurance is the must thing that everybody has. And it has to be minimum as per whatever your salary, minimum 25 to 50 lakhs of health insurance you have to have, because now medical expenses has rise a lot. Hospitals are not hospital, they are five-star hotels. They charge you like anything. This room 5,000 at night, this room 5,000 room, this room with big television with 10,000 room. So there's enormous expenses that you spend in hospital. So health insurance is must. The second thing is basically what insurance you have to take. Term insurance. Term insurance is something basically I buy a premium and my family will get the money if somebody happened to me. You have planned everything basically. You have good hamster. But have you planned that if my income is not there, how my SIP will go, how my EMIs will go, what my family will do? If you are the sole breadwinner, the term insurance is the must thing. What kind of insurance you have to avoid? It's like ULIP, whole life, LIC, retirement, pension plan. These kind of plan you have to avoid because they are earning a rate of interest only 4 to 6%. They are high mortality charges and they will not help in your wealth building exercise. Next slide, please. Now, basically, the investment planning, different horses for distinct courses. It's like in a horse race, it depends on the course. And as per the course, they decide the horse. It's like now, as per our goal, basically, we have to decide if our goal is to achieve a financial freedom in early age, then we have to have good amount of equity funds, gold, real estate. So that can help to get good interest. Like equity is the only asset class that can give you a return of around 20%, 15%. But there's a risk in it. Real estate look good, but there is a heavy amount needed. Gold is a good option. Gold basically, if we see the Sensex in 2007-8, it's around 8,000 and gold is around at 10,000. Now Sensex is around 81,000 and gold is at 92,000. So gold also has given, we always talk about equities and only equities. But gold also has given the similar returns kind of nifty only. In last 15-20 years, if we see the return of the gold is equivalent. So I'll just give you an example. A large cap fund has given a return of 22-23%, but the multi-asset fund has given it return 27%. Only equity exposure is 50 to 60%, 40% in debt and gold, and given the 5% more return than that, basically that a normal 100% large cap equity fund. Why? Because we think the gold as a safe asset will not give return. It will definitely give return. When equity is not working, then gold will work. So we have to diversify. Diversification is the key. We don't have to have only real estate in our portfolio. We don't have to only equities in our portfolio, only gold. We have to diversify in each and everything in each asset class. Next slide, please. Now it's inflation. I've already discussed. You can read out the slide. Amul butter 2015 is 15 rupees. In 2018 is 46. Now in 2030 it will be 130. I did my MBA in 2 lakh rupees. Now basically my son will do in 50 lakh or 70 lakh. In 2 BHK in 2005 is 40 lakh. Now it's in 2 crore, and 2013 it would be a 9 crore or 10 crore, anything. So the cost, if the things we want to, what our future expenses are rising, so we have to increase our income also. So we have to invest in that class that can beat. If you have having a FD of 6%, or a basically saving a bank account deposit of 2% will not help. We have to have something in our portfolio that is beating inflation consistently, like 9%, 10%, 11%. That's the key, that we can have the funds that we need at our retirement, for retirement expenses after retirement, to match the expenses after retirement. Please, next slide, please. This is compounding. A equal to this formula we have read in school. I've already discussed compounding. Compounding work in both ways, negative and positive. If we have good amount of investment, SIP, mutual fund, gold, real estate, then our money is compounding. If you have good amount of debt, loan, credit card EMIs, personal loan, home loan, then we have a negative compounding. So what we have to understand from compounding, we have to check every month, every quarter, every 6 months, that are we compounding the wealth in a positive or negative way. Compounding will work on both ways. So if you have a lot of debts and also have less investment, then you have to increase your investment, else you will not have the corpus that you required. Next slide, please. So the same thing, basically, if we start early, we will have we have to save less. We'll start later, we have to save, we have to invest a high amount. If I have started at 18-year age, only 5,000 rupees, and if we'll invest 5,000 rupees after 5 years, then the corpus will be a huge difference, is approx double. So we have to start early and we have to step up. The one hack I'm giving you here is step up SIP. So whenever you are starting an SIP or already have SIP, do a step up in that SIP. You can tell your broker, you can do it online. And whenever your salary increase by 10% or 15%, that's a minimum, bare minimum, that the increase. So you have to increase your SIPs in some proportion. But what happened basically, when the actual amount came, actual time came to do that, then some expenses came. But if in the beginning of itself, you have given an instruction that it step up, so then you will manage the expenses also. So there's an old saying, don't invest whatever is left after spending. Spend whatever is left after investing. That's a quote from a Warren Buffett, sir. That's apt. You have to have the automated saving. If you try to save from your bank account yourself, you will miserably fail. So best is to have standing instruction of recurring deposit, SIPs, PPF, anything basically. Like in my case, I try to save a lot of money, but I'm not able to. What I do every month, I have a standing instruction between my account and my wife's account. So I'll, from one good amount, 30% of amount every month goes to my wife, then she will save. Next slide, please. So this is tax planning. Now basically up to 12 lakh rupees, you don't have to pay any tax. I'll not read out the slide. I'll just give you some simple thing. Like if we anything that having an interest income, it's taxable as per your slab. If like you are having a fixed deposit, the interest, if you made a fixed deposit of 5 lakh rupees, then you are paying interest not from that 5 lakh, because you have made a deposit 5 lakh of for 5 years. The maturity will be after 5 years, 7.5 lakh. The 2.5 lakh you are getting only 5 years. But your TDS, your in taxation is every year is going from income. So any kind of income that has interest is taxed on the basis of accrual. Whenever you accrue the money, you have received in your bank account or not received, does not matter. If you accrue that, you have to pay tax. Instead of keeping your money in fixed deposit or a saving bank account or a senior citizen savings scheme, you keep in mutual fund. You can keep in a gold ETF. You find mutual fund risky. You can keep in a real estate. You keep in something that have capital gain, because capital gain, it's your choice. Whenever you sell that mutual fund, when you sell that gold ETF, when you sell that property, then only you have to pay tax. Otherwise, you don't have to pay tax. And your slab is 30%, you have to pay 30% on your income, but the capital gain slab is 12.5%. So you have to pay basically almost 17.5% less. And the one more thing, one advice for investment, one thing called profit harvesting and a loss harvesting. When we see basically any gain in our mutual fund portfolio or stock, we can book a gain of 1.25 lakh every year. So we can save a tax of 12,500 every year. Next slide, please. And the most important is why retirement planning, basically. Uh, it has seen that out of love, most of the retired people give them repay the home loan debt of their kids, gift the money to give, and some we have seen a famous case, that Raymond thing, that he has given everything to his kid and now he's like struggling for money. So uh, you don't take any emotional decision. Have money in your bank account, because the financial stability is you have to have financial stability after retirement. It gives you the confidence. I'll tell you, the confidence of a senior citizen after 65, 70, it's like a kid only. They behave sometimes like a kid. So if you don't have anything backing you, you can have basically a low confidence. Sometimes you can go in depression. So to avoid all those things, you must have a proper retirement planning, and you must have the funds, enough funds after your retirement. Next slide, please. Estate planning, basically, estate planning is what happened basically. If you are not having a will, if you are not having a basically trust, if you are not basically proper, nowadays basically you can record your video also, that what you want to give, what you don't want to give. Because whenever you are alive, you have to distribute your wealth properly. Otherwise, after we have seen lot of court cases, if 30% of the cases belong to property disputes only in our court, and they have no end, 10 years, 15 years, either you have not used that, your kids have not used that property, the court case is going on, you are paying good amount of money to the lawyers, that will not help anybody. So it has to be a proper will, proper settlement before because nobody knows, and the exact age basically it's 40. Don't wait till 50, 60, 70. Nobody knows basically. You every 10 years, first you make a will at 40, then revise after 5, 10 years, 50, 60, whatever the every 5 years you can revise, depend on basically asset. But it has to, you have to make a will, so there will be no dispute after you. I think next slide. I think it's time for questions. I've completed. I think I've taken more time that's allotted to me. Sorry, Noriji, for the same. Rohitji, now we can take questions.
Yeah.
Thank
Anyone
you,
who has
thank
questions,
you,
please
thank
raise
you.
their hands.
Before questions, I just want thank you everyone to listening me with the patience, and thanks a lot. Yeah,
Hi. Hello.
Rohitji, we can take all the questions that there in chat one by one.
Yeah, yeah. Let's take the questions from the chat first.
Hi, can I ask a question?
Yeah,
Is that
please.
okay?
Yes,
Okay.
ma'am.
Okay. I've actually also posted on the chat that if I have to fund my child's education, he's studying abroad. So do you suggest taking the education loan, which is 11.5 or 11%, or take like funding it from the overdraft against my FD,
No, ma'am.
or
Please take education loan, because education loan has a no limit on your income tax. You will save a lot of in your income tax. That's the only loan there in Indian domain that 100% of the interest you can claim. Like you have paid a 5 lakh of interest every year on education loan that will reduce from your total income tax liability. You have earned 17 lakhs, 5 lakhs education interest. Now you don't have to pay any tax.
yeah. So, thank you.
One more question. One question here. That is, this educational loan is also covered under this new tax regime, or it is part
Yes,
of the old tax regime?
it's a part of old tax regime only. New tax, basically, I have to check. I'm not sure, but I think in new tax regime there is no deductions.
No, just I think so. Means which deductions I used to claim in the old tax regime, the new tax regime when I chose, then it all deductions gone.
Yeah, it's
So
better to have old tax regime if you're an education loan.
Shipra?
Yes. Hi, Anurag ji.
Hi,
First of all, thank you for delivering such a beautiful session.
thank
My
you.
question is, I got to know that in the new regime, we do not have anything for this house loan rebate.
Yes,
And
there's nothing, ma'am.
oh, okay, okay. So I mean, I'm not sure. For many of the planning purpose, we normally take the home loans. We used to take the home loans, right? For the planning purpose. So this way we own a house as well, and we also invest in the loans. Now, for the ITR purpose as well, but how it can be helpful now? I think there is no use of it, right?
No use in terms of tax planning, but in terms of building a wealth or having a real estate, is still basically home loan is
Yeah,
a good option, because we at this is very chunk amount, lot of money has to be invested in real estate. So home loan is a better option to have.
understood. Thank you.
Mr. Dayal? Mr. Dayal has the next question. Okay. Shweta,
Anyway,
you
sir,
can ask.
new regime is better, sir.
Yes, sir. Am I?
Yeah, you are audible.
Oh, yeah, thank you for giving me opportunity to ask the question. I want to ask, like in new regime, only a standard deduction is there, 12,500 rupees. Till 7 lakh, we don't have to pay any taxes. How we conclude 5 to 7 lakh if we are earning in like 6.5 something like that? Then how we put into the how we can save our investments, and we can make more into ATC or ATD, or what you suggest?
How much you are earning every month?
Right now, currently, I'm not doing any job.
If up to 12 lakh, there is no need to pay any tax. If you're
12
total,
lakh.
yeah, in new regime up to 12 lakh, there is no tax.
Okay.
So if you are
Uh,
earning anything between 0 to 12 lakhs, there is no need to pay any tax. And for capital gain, under section 87A, if your income is 0 to 5 lakh, you don't have to pay any capital gain. After 5 lakhs of income only, if like you have invested in mutual fund and the total gain is 5 lakh rupees, you don't have to pay any tax. After 5 lakhs only you have to pay tax. That 12.5% only if your total income is more than 5 lakhs annual.
Sir, if we earn in stock trading, but if we lose in option trading, can it be adjusted?
Yes, yes. The loss is adjusted cross asset class. So if you have loss in future and options and you have a gain in capital gain, you can adjust that. There's no need to pay tax.
Thank you. Thank you so much.
And one question is direct versus mutual fund. I'm reading in chat. Direct is always better. There's a less expense ratio.
Suchitra, you have raised your hand.
Yeah, hi.
Yeah.
So actually, I mean, I asked you this question regarding the education loan, and you mentioned that it is better because then you will be paying the tax. But then we fall under the new plan, so then it is not advisable,
Ma'am,
is it?
individual can change the plan any number of time. Businessman or professional have chosen to new regime, they can't change, but an individual can change old to new, new to one.
Okay, okay. Maybe I'll connect with you separately. I don't want to
Yeah,
take any
you can.
mess.
Ma'am is CA. I'm like finance guy. CA will be the better person to guide.
Sure. Okay.
Yeah,
Thank
please.
you. Thanks, Rohit.
I have a question. Senior citizen, they need regular income, right, for their daily expenses, so that they do not depend on their children. So in that case, what you suggest? I mean, earlier you suggested to invest them also in real estate kind of thing, but that would not generate any, regular income for them.
Ma'am, senior citizen best is you can invest in a balanced advantage or multi kind of asset, multi-asset kind of fund, where there's an if equity exposure is somewhere around 50-60% and 40 to 50% in debt and commodity. Commodity means basically gold ETFs. So then you can have a monthly SWP, systematic withdrawal plan from your mutual fund, where up to 1.25 lakh you don't have to pay any tax. So basically if you are withdrawing 30-40,000 every month, you don't have to pay any tax. That will be a tax-free income of 40,000.
Not
Piyush?
understanding, sorry.
We can connect later. I'll just try to explain. Basically, as a senior citizen, we mostly invest in fixed deposit. So instead of fixed deposit, you can invest in a mutual fund, hybrid mutual fund. The categories are balance advantage and a multi-asset fund, where the exposure to stock market, equity market is only 50%, and rest your money is invested in gold and government securities. So 50% of my money is invested in safe assets and 50% in risky assets. And the interest rate you will get somewhere around 10 to 15%, minimum 10%. And one market was at peak, it's giving more than 15%. In fixed deposit, you are getting only 7 to 8%. And then also you are paying 30% tax. So net post tax, you are getting only 5%. In hybrid mutual fund, post tax, you will get more than 10%.
Piyush?
Okay, so I'm also having the same question. Can you give a little bit more details about how the taxation calculate on the mutual funds? Like
The mutual fund taxation is we are investing in equity mutual funds that's invested in stock market, direct equities. The taxation is 12.5%. After 1 year, first 1.25 lakh, there is no need to pay tax. If I have invested 1.25 lakh rupees and that in last 1 year that has rise to 2.5 lakh and I've redeemed everything, I don't have to pay any tax because first 1.25 lakh, there is no tax. After first 1.25 lakh of the gain, the rest of the gain I have to pay 12.5%. If I invested 10 lakhs in 2015 and in 2025 that became 20 lakhs, then I have to pay basically 1.25 no tax, 8.75 into 12.5%. That tax I have to pay to government.
So that is with respect to the total amount invested or with respect to a single mutual fund?
It's a
Like
total amount invested.
if I invested around 5 or 6 mutual fund and I am redeem around
Total capital gain. Even it's your stock market direct shares also come in equity only. So it's equity, the 1.25 lakhs across all equities.
So Anurag, let's say somebody is earning 50,000 as interest, so he will end up getting around 6 lakhs yearly. So in that way also he is not paying any taxes.
Yes, he's not paying any taxes.
So in that case, FD is good.
In that case, FD is good. You can choose small finance banks. They are giving FD rate at 8.5%, 8%. And they are non-banking finance companies, they are giving around 9%, but they are a bit risky basically. But a small amount you can always take risk. 4-5 lakh rupees, 5 lakh rupee FD, you can have 3-4 institutions.
Yeah. Okay.
Small finance banks, if you want to have an FD, small finance banks are a good option basically. They are giving around 8%, 8 to 8.5%. Senior citizen, I think they are giving 9%.
Piyush, you still have a question?
Yeah, it's fine from my side. Thanks, Rohit. Thanks, Anurag.
Okay. Shweta?
Yes, I have one more question. If I invest in the month of April, I invest some amount, 1 lakh amount in mutual fund and 1 lakh in this direct stock market.
Yes.
And withdraw, uh, I assess that I have received a gain which is about 10%, 10-15%. And in mutual fund also, I received a profit of like 13%. So if I sold out the same in this March, coming March, next year March, closing of the financial year, though it will be calculated in that year only. So 31st, on 31st only I sold out.
Less than 1 year, less than 365 days is 20% tax.
20% taxable.
Yeah. It's a short-term
So
capital gain. It's a short-term capital gain. More than 1 year is 12.5%. It's a long-term capital gain. And less than 1 year is short-term capital gain. So short-term rate is 20%, long-term rate is 12.5%.
up to
And any amount, any gain.
any amount, even if I am
If
getting a
if your total income, if your total income is less than 5 lakh, you don't have to pay any tax. Even you have a 3 lakh, for example, you invested, your total income is less than 5 lakhs. You have invested 5 lakh in mutual fund and 3 lakhs in share. Then total gain is 4 lakh 50,000. You don't have to pay any tax. That 1.5, 2.5, that because section 87 of the income tax act says that if your total income is less than 5 lakhs, you don't have to pay any kind of tax.
and if it is 10 lakh, then I have to pay the tax.
If it is 10 lakh gain, then you have to pay. It's not about the invested amount. Just forget the investment amount for a while. Just the total gain basically. The tax is on the gains basically.
Okay, fine. Yeah, thank you.
There is a question in a chat. Land was bought in 1985 and the house was built that time only. How is the profit calculated then and now?
You have to calculate indexation basically. In Google, you will find an indexation calculator. There's an index value basically. Last 30 years, you will get index value of every year. So you have to calculate the index basically that the year you sold and the year you bought, you have to multiply by the year you sold, then you have to divide it. Basically, there's a formula of indexation. That value called CII, cost inflation index. So that's available on Google or basically any calculator. You can calculate yourself also. So first you have calculated the index value. For example, you have bought the property in 1970. The property cost is 10 lakh. Now you want to sell in 2024. You have to calculate the index value. The index value of that probably come around 30 lakhs or 40 lakhs. Whatever the amount you will sell above the index value, you have like sell at 60 lakhs. So index value from the actual sale on 20 lakh, on that amount you have to pay tax. Index value means basically inflation adjusted value.
No, so if how we will calculate the initial cost of the property, because land was bought and the house was built on it, right? So there is nowhere written the total cost of the house because it was not bought as a house.
Yeah, that is there, but then you have to calculate the total cost of the basically construction is has a depreciated value. Mainly the value of the property is the land only. Over a period of time, basically it's the value of the land. Then you can take that cost also, whatever then you can take the calculation. Your CA will better help. I'm not the exact right person to answer this question, but the basic is basically over a period of time, 20 years, 30 years, 40 years, there is only land value in the property. Construction values always depreciate.
Okay, so land will appreciate and construction value will depreciate.
And construction value will depreciate.
Oh, okay. 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 Thank you. Thank you.
Any more question?
Yes, I had put it on a chat. Can I speak?
Yes, please, sir.
Well, as you said, short-term and long-term capital gain taxes to be paid. Now,
Yes,
if I buy some shares equity every year,
yes, sir.
and for the same company, the same share, if I want to sell after 3 years, how will I identify that this share of 10 which I bought was 3 years back and this share of 20 which
It's
I bought
first in, first out, sir. FIFO method.
first in,
First in, first out. First in,
Okay.
first out.
Thank you.
Any more question?
May I ask one more question, please? If I
Yeah.
am allowed. Thank you. If we have an investment of suppose in the one stock, and we consolidate, we have like purchased ONGC. For example, I am saying for ONGC we purchased 3 years back for 300 rupees, and now again I've purchased for rupees 400, and in coming time I would be selling out 100 or 200. Then what would be the capital? It will be the capital gain, or how it will be calculated? Or first in, last out? What method did you?
First in, first out.
First in, first out.
First in, first out. So basically, it's
So
on a
capital.
it will when you buying an average at different intervals, then you have to calculate the average cost of it. And basically, if you are like sell 100 shares, you have bought over a period of year. For example, you bought 400 shares and sell 200 shares. Then the first 200 shares bought will be considered as the last 200. So difference between the two will be the loss or profit.
If I am selling out my half of the stocks, like 500 total I am having, 300 previously I have purchased and 200 right now.
That's
I
why
am
I'm saying
selling out 250 shares.
the last 300 will be equivalent to first 300.
Okay.
Am
Can
I?
you, can you detail it to,
It's like on 1st of April I bought 100 share. On 2nd of April I bought 200 share. On 3rd of bought I have 300 100 share. And the whole
just, so sorry to interrupt. I just want to ask, in 2020 I have purchased 200 shares. In 2022 I have purchased 200 shares. Now 2025 I have purchased more 1000 shares. So if I am selling it out 200 shares or 500 shares, so how it will be assessed as capital gain or not? Main point is this.
it's a capital gain because the first share you bought in 2020 22 that will considered. The last is last 200 is equivalent to first 200. It's first in, first out.
Okay.
FIFO method, first in, first out. So basically, as per the date, the shares you bought, prior shares you bought, that will be considered only for your capital gains.
And it will be assessed as capital gain if I am selling it out,
It's
right?
loss and profit basically is the difference between the price. If it is a profit, then you have to pay tax. If it's a loss, then you can, and if it's a loss, you can take over next 8 years. You can adjust, and you can adjust if it is a profit from equity or a loss from equity, and you have a profit from gold ETF. You can adjust both.
Okay. Gold also, commodity also, and equity also.
Gold ETF, gold ETF,
Only gold ETF.
gold ETF. Yes, gold bond also. Gold bond also, gold bond capital, gold bond interest, you can't adjust, you have to pay tax on it. Gold bond, if you sell the exact total bond amount, it's considered whatever is there in capital gain. Any asset which is having a capital gain, then you can adjust. Even you can adjust basically your mutual fund gains to buy a property. If you have invested 1 crore rupees and over a period of time you have 3-4 crore of capital gain, you can bought a property, you can adjust your capital gains once in a financial year only.
Okay. Thank you.
Any more questions?
This is about capital gain. How can we avoid the tax if we sell agriculture land after 40 years? Is there a way that we go a FD somewhere with the government or something, or we buy another land? How can we avoid capital gain on agriculture land selling?
So I'm not very sure, but I think anything is basically if you bought something agricultural land, I think basically like a residential house, you can bought another residential house. But I think commercial and agriculture, I'm not very sure that what's the you can adjust or not. But capital gain is the simple calculation of the capital gain is if you are buying in one capital gain asset, and if you are buy if another under 3 years, you can buying in another capital asset, you can adjust the tax with that gains. And also, if you don't want to buy within 3 years, there's an option to open a capital gain account with the bank with FD or without FD, and you will have a 3 years. And if first 6 months, you can buy a 50 lakh bond, 54 EC, under section 54 EC, there's a bond called REC bond, NHI bond. Up to 50 lakh, you can adjust through bond. Rest of the money, basically, you have to invest or you have to pay tax.
Thank you. And this bond is for how many years? That then I
Bond
can.
is for 5 years. 5 years lock in. After 5 years, you will get the money, and every April you will get the interest in your bank account, and the interest is taxable.
So if I understand that if I want to avoid paying capital gain, I can buy
Buy
bonds
50 lakhs, 54 EC bonds.
and just wait for 5 years. After that, I can redeem everything.
After that, you can redeem basically. The bond will automatically come to your bank account, and that's a tax-free amount basically, and you don't have to pay further tax. But during the course, during the 5 years, whatever the interest you will get on that bond, it's added to your income.
Anurag, I believe that is only once in a lifetime offer for anyone,
Yes,
right?
yes. You can do.
Yeah,
You can't do with multiple properties. It's a financial year.
Do we?
Hello, I just want to ask one question.
Yes.
Yeah.
Yes, sir.
Hello, is I audible?
Please, sir. Yeah, you are audible. Please, sir.
I have invested one asset last year in 2 installments. I have paid one installment, and one installment is due in the next year. Now, builder is offering me the one option that if you want to do a early payment, I will that they will provide me 12 to 13% benefits in that for the early payment. Is it this deal is good or bad?
Sir, you have to check basically the fairness of the builder, and then you have to calculate. You just go and calculate in Excel basically what are the interest you are saving basically. If you are doing an early payment, what benefit is giving? If the amount is lying in the bank account, what the interest that amount is earning. So you have to calculate that first before paying basically. For example, if I'm paying 6 months early and builder is just giving me 10,000, 20,000 discount, and that money if we lying in the bank account or mutual fund will earn me 20,000 for 30, 40,000, then there is no need to pay early. You have to calculate basically like the benefit he's offering and the benefit you will get from the bank account or a mutual fund. Because you are paying from, like, either you will pay from bank, either you will pay from mutual fund, either you will pay from basically any asset that you are having, that you have to calculate the return of that interest and the difference between the of benefit that offered by the builder. So anyway, if it is the benefit is high, then you are getting from your bank account or mutual fund, then definitely you will go with the builder. If it's the benefit is not that much, that let keep money in the bank account and pay timely.
I have invested that money in my FD right now, and it is providing me approximately 8%. Now the builder is offering me 12% and 13%.
12, okay, 12% annual basically.
Yeah, 12% annual.
If you check with the record of the builder, if he's accurate, then you can definitely go. Because sometimes these promises are not fulfilled. Because in Delhi NCR, you're talking about Delhi NCR or any
Delhi NCR.
Delhi NCR builders are not fair. Please check
Yeah,
this.
that's why.
Please check the offer. If you are getting 12%, it's a good offer.
Okay. Thank you. Thank you so much, Anurag. Thank you.
Thanks a lot.
Shall I have your contact number for the any financial advices and
Yeah, I'm available on LinkedIn. You can check Anurag Saini. You will find me on LinkedIn.
okay. Thank you.
Any more questions, guys?
Yeah, this is Gautam. Am I
Yes, sir.
audible?
Yes, sir.
Yeah.
Yes, sir. You are, sir. You are.
Yeah, sir. I just put up my question on the chat box. Actually, I don't know whether I got that response. So it's about CIBIL score rating. I actually had all loans, previous loans already been processed and cleared. But
Yes,
still,
sir.
I can see a few loan accounts which are open, which are not basically assigned, wrongly assigned to me. I wrote several letters to the civil council, but there is no response yet. And
They
because of that, my civil score rating is also low. Proves
got
that,
it,
sir.
sir.
Can you
Got
guide
it, sir.
us something
There's
on that?
you can write to Reserve Bank of India. Also, there's a banking ombudsman officer. You can write it to them. It will help. You can directly write to Reserve Bank of India also that my financial institutions are basically have done some goof up and they are not helping me in resolving the same. Reserve Bank of India will definitely take action. Is a bank or a NBFC company? It's a bank, sir, that you are
It's a
talking about.
bank, sir.
You
Yeah,
definitely
yeah, yeah, yeah.
write to the Reserve Bank of India, sir. They will definitely help. And banking ombudsman officer, you can check who is the ombudsman officer, and you
Okay.
can check
Thank you,
them.
sir. Thank you.
You can also file your case directly to Optimum. I have done that and I have got good results twice. So directly go, create your account, put down all your things and concerned people name, and they will definitely come back to you and they will plead to you, to resolve the case. So don't worry, just go there.
Any last question? Any last question, guys?
Anurag, though I have mentioned, like, the REC bond or that, that bond option, they are paying very less. Why such investment is still, significant?
So
Need your view on this.
they are people who don't want to pay any tax basically, and they don't know how to invest the money. They don't want to take the risk. For them, it's a good option, sir. Basically, if you know equity market mutual fund, you will not definitely will not buy that bond. You will invest somewhere else. But if some senior citizen at 70 years, he does not want any money, he does not want to have any option, he will definitely buy. Even that does not require that money also. Though, but why he'll pay that much amount tax? He will have 5 years. Either he will enjoy that money or his grandson will enjoy, or his son or grandson will enjoy that money. But the government will not take the benefit, no, sir.
Okay, yeah, thank you.
It depends, sir, basically. If like person like you, definitely will not go for these options. It's you will invest somewhere else and get good returns, sir. Even
Yep.
paying tax is a better option because over during for 5 years, there's a lot of option you can basically have.
Exactly.
Yes.
I mean, earn too much, pay much tax. So that is good option.
But sir, everybody can't take that much of risk, no? Because when you are going for a higher rate of interest, 15%, 20%, the risk is there. Like if I'm going by walk, the chances of getting me an accident is less. If going by bike, it rises. If going by car, it rises. If going by airplane, if accident happen, nothing will left. If in a car, something will left. So it's the risk basically. If return is high, the risk is also high, sir. But and everybody is not want to take that much of risk, and there is no need to take that much. I've given you an example of a multi-asset mutual fund only taking only 50% return, giving 5% better return. There is an option available, gold, that has given more than Nifty. So why to take that much of risk, sir?
Yeah. Your second slide was really good when you showcase the four mode of. I mean, this is only four mode, but the basic intention was to say which mode you are comfortable with.
You are
Either
comfortable.
bike, if you want to save yourself, or either bike is very risky, aeroplane and these things. So same way in finance as well, there are different mode
They are
which you
different.
opted FD or bond or direct mutual shares or funds. So this is up to you based on your risk appetite. Yeah.
If you are not in a hurry of accumulating funds, you can choose option. If you are someone that have 100 crore property in your name, you can keep in the fixed deposit. That does not
Yes.
matter.
Are there any more questions? Anyone?
No, but we want LinkedIn link because there is so many Anurag Saini available on the LinkedIn. So we cannot find the right one. Please,
I'll share.
And also the PDU mode, Rohit, if you can share.
There are no PDUs for this session.
Okay. No
Yeah.
problem.
can we have the PPT?
That I need to check.
Okay, thank you.
Well done.
Rohitji, just wait. I pasted my LinkedIn in chat. Not able to send. Rohitji, I'm not able to send.
You can send it to me. Let me send it.
Sure, I'm sending it to you.
Yeah.
Probably, have you got it?
Yeah, we have got it.
Yeah. I've shared my LinkedIn ID to Rohitji. Rohitji will share as per the comment. I hope I've answered all the questions and that session was interactive. Rohitji, please give me the feedback. We can do more.
It was a really enriching session, I must say. We have actually learned a lot about financial planning and investment.
I want to do on health also whenever you give me a chance.
We will do that
Because
certainly.
wealth is money is only one wealth. There are only different 6 types of wealth we have to work in our life. That is spiritual wealth. There is basically your health is the real wealth. Then basically
Exactly.
it's social wealth. So money is only one part that we have to work. Other wealth we have also to take care of, and health is the priority in the life. Basically, your EMI, your money, your SIP, everything. Basically, you have 100 of problem today, but after 1 week or 2 week, doctor tell you that you have that problem. Then you forget each and everything about those problems, and only one problem there you focus. So first you have to take care of health. If health is there, you will definitely earn. Warren Buffett is not earning that much of money because he is doing such growth. The only thing he's doing great, he is 89. That's the only great thing he's done. Otherwise, he's earning only 19% compounding every day, every year. But although he's earning that money from last 40 years. So that's why
Right.
he has so much of wealth. So basically, if we want to enjoy our wealth, we have to be fit. After you have accumulated a crore rupees, 5 crore rupees in your bank, now you have to visit a mountain, a good scenic view, but you are not able to walk. What will you do with that money?
Yes. So Thank you once again, Anurag, for this enriching session, and I would like to thank all the attendees for joining us today. I hope everyone is walking away with valuable strategies and a renewed perspective on managing their finances. Thank you, everyone. Thank you, Anurag.
Thank you, sir. Thank you, Rohit, for giving me an opportunity, and thank you to the Nilima ma'am to giving me the opportunity. And the audience was like wonderful, and I also enjoyed a lot. Thanks, everyone.
Done.
Thank you so much.
Can I log out, Rohit?
Yeah.